Okay, problem 6, exercise 111 in the text. We finally got rid of that miserable Cuban company, and now we're dealing with Harris Company. And they give us a little bit of information, but not a lot. They tell us that we have our total variable cost at 30,000 units. It's 180,000. And they tell us that our total fixed cost at 30,000 units was 300,000. At this point, I hope you are all comfortable saying, well, if that's our fixed cost at 30,000, that's also our fixed cost at 40,000 and at 50,000 and at any other 1,000, as long as it stays within the relevant range. They don't give us the variable cost, but we can figure it out easy enough. We told that our variable cost at 30,000 units was 180,000. Our variable cost is $6 per unit. Now all we have to do is do the math. $6 times 40,000, 240,000. $6 times 50 is 300,000. And then our total costs are the totals. 480,000. Those two added for that. 540,000. And 600,000. Now to come up with the approximate cost per unit. The variable cost per unit across the board is going to be $6, because that's the concept of variable cost. It remains constant at the unit level, varies in total. Then it asks us to come up with the fixed cost. Fixed cost is the opposite. Fixed cost stays constant in total, varies at the unit level. So at the 30,000 level of output, our $300,000 worth of fixed cost is roughly $10 per unit. At the 40,000 level, we take our 300,000 in fixed cost, divide by 40,000, and we come up with $7.50 per unit. Again, these are approximates, because maybe it's not really 40,000 units, maybe it's really 40,003 units. Close enough for government work. And a lot of managerial accounting, close enough is good enough. It's like horseshoes and hand grenades. It's an area weapon. And last but not least, if we produce 50,000 units at and use our $300,000 of fixed cost. Fixed cost varies at the unit level, stays constant in total. 50,000 divided into the 300,000 gives us $6 per unit. Approximate fixed cost per unit. Total cost per unit, again it's an approximate, $16, $13.50, and $12. That was the first part that they wanted us to do. That was part one. The next part they ask us to do is a contribution margin income statement. So if we make, and they tell us, suppose that they produce 45,000 units at a selling price of $16 per unit. So 45,000 units, $16 per unit, 720,000. Our variable expenses stay constant at the unit level, vary in total $6 times 45,000 units, 270,000. By definition, selling price minus variable cost is contribution margin. In this case, that's 450,000. That's our contribution margin. Our fixed expense that they gave us, 300,000. And our net income, $150,000. Selling price times units sold, revenue, or sales, minus the variable cost per unit times the number of units, gives us contribution margin. Contribution margin minus fixed operating expense, operating income. So in this problem, the net operating income, nice and big, $150,000.